Good morning, everyone. I'm Kaustubh Belapurkar, Director of Fund Research at Morningstar India. Welcome to this discussion on investing in strange times. Though there are encouraging signs of the pandemic subsiding and the economy coming back on track, this year we've obviously seen our own share of challenges with war in Europe, increasing cost of crude oil prices, and obviously inflation trending upwards. Right? Global central bank policy remains another very key watch point. But what are the implications for the Indian economy and our markets over the long term? And what are some of the key investing themes that Indian investors can look forward to over the longer term? We discussed this and more with one of India's finest investors, one who's seen it all as an involved participant for close to 3 decades. So it gives me great pleasure to introduce our speaker, Mr. Madhusudan Kela. Madhu, as he's fondly known, is the most well-known and seasoned investors in the Indian capital markets. He's expertly played the role of a CIO for more than a decade and managed the equity portfolio of one of the largest asset management companies in India. And after a 17-year successful stint, he started his own entrepreneurial journey in January of 2018. So Madhu is currently the promoter of a proprietary investment vehicle, MK Ventures, which is a boutique investment firm focused on alpha opportunities. He's also served and serving on various committees of CII, FICCI, SIDBI. Madhu has in the past been recognized as the best equity manager and was actually received this award from the Prime Minister of India. He also actively counsels several leading industrial houses and also advises the family office of several distinguished HNIs and select global institutions and investing in India. He's also frequently invited to make representations to policymakers on critical business decisions related to national importance, policies, and also helps taking the industry voice to policymakers, right? And you can see him and hear his views regularly on various forums and business channels. So rest assured that I think we're hearing amongst the best in this sort of domain. But not only is Madhu an astute investor, he's also a great human being. So he's been involved with several social and religious causes and is the trustee of the Konark Cancer Foundation, which is providing financial assistance and helping patients get the right treatment and care. So Madhu, it's a great pleasure and welcome to the first ever Morningstar Investing Summit. Thanks for being with us.
Yeah. Good morning, Kaustubh, and good morning to everyone. First of all, thank you so much for having me here. It has always been a pleasure interacting with Morningstar through my own journey over so many years, and an absolute honor and pleasure. Thank you so much for having me.
Sure, thanks. And before we get into the discussion with Madhu, I think a very important disclaimer for the audience: we will be discussing various themes and elements of the market. Madhu may or may not have investments in some of these, but I think for every individual who's on the call, I think it's important to do your own due diligence. Consult a financial advisor if required for your own investing journey. This is more about spreading an understanding of how Madhu's investing journey and where he finds interesting opportunities in the market. So Madhu, just to start off, obviously we spoke about that.
Thank you for the disclaimer. It's very important in today's days and times. Yeah.
Absolutely. So I think it's been an interesting journey for you. You've obviously been in the markets for close to 3 decades. But just for the interest of the audience, what got you interested in the markets in the first place? How did your journey start?
So I would say, Kaustubh, I was very lucky to find introduction to markets in a very early part of my career. Basically, I was staying in a hostel, and this was the era of 89-91 bull run, Harshad Mehta bull run. So a lot of students were staying in the hostel. They used to make money, and I somehow got connected with that ecosystem. And very early on, I realized that, because I come from a very small village, my father is a, you can say lower middle class farmer come businessman. So we had no resources, we had no networking in a city like Bombay. So very early on, I realized that this is a place where you don't need to be like son of Tata Birla or Ambani. You can start with any amount of capital. And if you really understand this space and put effort, you can succeed. And as I worked my journey through and did my MBA, most of the projects which are to be done, 28 projects, you can say all 28 of them, I did it in the stock markets. And by the time I passed out MBA, I was absolutely convinced that there is absolutely no looking back. And since then, I passed out in May 91. So it's been almost 31 years. I've been at it. Honestly speaking, I get intrigued by the market even today. My daughter the other day was asking me, Papa, you've been around for so long. How much of the market you know? I would, and you normally don't lie to your own children. And you don't lie anywhere, but you speak your heart. So I said, less than 5%, because this market is so wide, and it teaches you, as long as you are willing and open, it will end up teaching you practically everyday costume. So it's been a very interesting journey, but I would feel a lot more to come.
Thanks, Madhu. And I think those are very, very, wise words for the audience. That even someone has experience with Madhu, there's always so much to learn in the market, and market is, amongst the greatest teachers. So, Madhu, like we spoke about, that you've seen so many hues and cycles in the market. You spoke about obviously, starting with Harshal Mehta sort of boom. Then we had the Asian financial crisis. We had the tech bubble. We had the bull rally led by infrastructure, the mid 2000s, and then the global financial crisis, and that continues. So, what have been some of your key learnings and takeaways, and how has that shaped your overall investing philosophy?
So, honestly, Kaustubh, it's a very open-ended question, and we can have the full session on this. I've had full session on my learning, but we'll just try to keep it as precise. So, I think the first and the foremost thing which I realized through my journey, which has shaped my own philosophy, is flexibility. That, you should be very, very flexible about investing. And if the moment you say that I don't do this or I don't understand this, then possibly you close many a door. What I'm saying is you should have the flexibility to examine anything which is happening around you. So that has been our mantra, which is why we never say that we are value investors or we are growth investors or we are momentum investors. We proudly say that we are opportunistic investors. We are here to make money in a legitimate manner, and we are looking for opportunities which market throws on us. A lot of the time, these opportunities are not generated by us, but they are being thrown to us by the markets. We have to have the real conviction and clarity and the open-mindedness to look at markets in that manner. I just give you a small example. Like, if you say that you don't invest in commodities because they are very volatile and they fluctuate a lot, right? Which is the reality. But if you look at last 1.5 year return, most of the commodity stocks have been between 5 to 10x. Now, I'm just saying, if you closed your mind that I don't want to invest in commodity stock, then obviously you would have given up such a big opportunity, would have gone by. So the first and the foremost is flexibility. The other point is, again, you have to always believe that you are always a student in this market. Because the more curious you are to learn and the more open you are to learn, the better the place will be, better the markets will be for us. So that curiosity is again very, very important in terms of understanding and making sure that we are every day we are coming with a mindset that I want to learn something here. And the third thing, what I realized, Kaustubh, which is again, these are not written anywhere in any book, but neither have I read. These are all my own personal experiences. Third thing is, इधर बहुत ज़्यादा ढेरसाना होने का जरूरत नहीं है. Because if you think that you will be able to time the market, you will be able to perfectly enter, you will be perfectly able to exit, those things are only there in theory. In practical world, they do not exist. And even if you get it, you don't normally get it consistently. You may get it by a fluke or by chance. But so I am saying broadly, as long as the broad thesis is in your favor and you can see the risk reward being in your favor, at that time, there is no need for you to be over smart. And I would say I have attempted to be over smart by betting on companies which my gut told me that they may not be right, but I still thought that they will give me superior returns. So I betted on those companies. I paid the price for it. Sometimes we betted on our experience of saying that we'll be able to time the market perfectly and we'll invest when we think is the right time. And sometimes, markets just run away. Like you see what happened in COVID. Who would have thought that the one of the biggest opportunity of lifetime will come through this pandemic? If the day the lockdown was announced, everyone had just virtually given up that this looks like a closed chapter. And lastly, I would say at the end of the day, it is only perseverance and your ability to be at this subject, do your homework properly, make sure that you have a proper thesis before you invest. Make sure that you are really, really on top of the numbers. You have run through the balance sheet properly. You have seen the profit and loss account properly. You understand the company in which company in the sector which you are going to invest in. And it is not about getting a tip. Trust me, whole world knows that Rakesh Jhunjhunwala bought Titan at 200 rupees. But the important point is that how did he get the conviction to hold Titan for 15 years? And how did he held Titan from 200 rupees to maybe 20,000 rupees? That is the real art of investing. And that is very hard. If it only comes through experience and perseverance. You have to be at this subject all the time. You have to be very, very passionate about it.
Right, sure. And I think that's a very important point, Madhu, that you made, that the art of investing does come through a lot of research, perseverance, and really being on top of things. So just from your own individual perspective, what is your investing framework and how do you evaluate individual companies? If you could give our audience a flavor about how would you go about doing that?
So again, the way we look at individual companies, first, of course, we have a proper theme on the sector, because I believe that getting a sector or a theme is equally important as it is to get the individual company. And the sector and a theme, again, it could come to you from anywhere. Like I'll just give you an example. In 2009, 8-9, we became very bullish on the pharma industry. And the starting point was that the market cap of the entire pharma sector in 2009 was less than 1 lakh crore. All of the companies put together, Kaustuv. See, this is what the brilliance of this market is, that all companies put together were worth less than 1 lakh crore. At that time, DLF valuation was like 2 lakh crores. So, this like 2 lakh crore and 1 lakh crore, one real estate company being twice the market cap of the entire pharmaceutical sector. That was a very, very good starting point for us. And this is the glaring opportunity. So once you get, okay, this looks something unreal, it looks disproportionate, and then you go into individual companies. Then you see what kind of quality of management you are betting on, what has been their governance practices in the past, what is the overall size of external opportunity with the company is betting on, how is the management team fully prepared. Then, of course, you do all your financial numbers very, very carefully. Of course, the three numbers which we focus on, one is cash flow, second is ROE. Whether absolute ROE today is right or wrong, but if we get conviction that in due course of time, this ROE will get compensated or will get reflected in the results. And the third and the most important thing is finally you get down to valuation. That, if you ended up buying, let's say, Infosys in 2001 at 120 PE, but it had everything which you can look for in a good company, but you significantly overpaid, and you have to wait for many years for you to get returns.
Right, sure. I think that's a very, very important point because we've seen in the past few years where, valuations had obviously run up and there was a lot of interest around, some of those stocks. So I think that's a very pertinent point that you make, Madhu. I think one of the questions, and, obviously we spoke about all this external noise that's coming in the markets. We're just coming out of the pandemic, things seem to be stabilizing there. Then you have the war in Europe, crude oil is obviously upward trending. Inflation is a little bit of a concern. How are you putting these pieces of jigsaw together when you think about the Indian economy and the markets? Is that something that you believe that our economy is resilient enough, or what are some of the things that you're looking for?
So two things here, Kostu. One, again, my 32 years of experience, that, whatever is very well talked about in the market, you should broadly assume that it is there in the prices.
Right.
So, whether it is a crude, unless now crude is not talked that it can go to $150 or $200, but current prices of crude are well being spoken about. The geopolitical tensions are well being spoken about. The worry of inflation is well being spoken about. So I would say, and that is what is reflected. The tightening is well being spoken about. It is not reflected in Indian market as much in the broad indices. But if you look at the markets like America, NASDAQ, so many companies, in fact, more than 50% of the NASDAQ companies are down more than 50% in last 6 months.
Correct.
In last 6 months, starting basically October, November. So it is very well reflected, and I would say to a large extent, it is discounted. Obviously, we have to monitor these things that they should not go out of hand. On the biggest worry on inflation, I have a firm view that inflation expectation may have been really well discounted by the markets. Though the tick will come, the number will come, but inflation expectation, that inflation is running very high. And now all the policymakers, all the government, everything, everyone is after controlling inflation. So to my mind, this is all there. And the broader market, again, has in a way discounted even in India. There are so many companies which are down more than 50% from their peak prices, which is not getting reflected in the broad indexes. So someone like me who doesn't have now a restriction, I am using this volatility, this noise to actually buy good companies. And I will continue to do so over the next 3, 4, 5 months through this volatility systematically. So I have my list ready. I have my broad prices in the markets ready. I have my working and the fundamentals on these companies absolutely ready. So we are continuously monitoring these companies. And we are actually using this noise and volatility as and when it is occurring to just keep on accumulating these companies. One thing about India and Indian market, that in the last 10-year costume, India has been one of the best performing index, the Nifty. And in the last 1 year again, India has been the best performing index in the world. So it is, it's like gets reflected in any industry or sector which does well, the price performance gets reflected. So I am pretty confident about resilience of the Indian story. I'm very confident that India as a country will do well. And hopefully, if oil prices don't go berserk, like if they don't go to $150, $200, there's no way to predict that. But if that happens, of course, markets could correct even from here quite a bit. But barring that, I think these are interesting times for India.
Yeah, absolutely. I think you put that across really well, Madhu, that these are interesting times for India. And I think one of the things that you've so successfully done, and you spoke about identifying some of these mega trends or themes well in advance and really riding out that wave. So from your perspective, India over the next 3, 5, 10 years perspective, what are some of the big themes that you're looking to bet on, which you think could really be a very important sort of segment in the market for investing?
If you ask me that 3, 5, 7-year question, I think let me just tell you, because we managed mutual fund and we invested in mutual funds. I feel that if you select the fund properly and if you select a proper fund manager, you will do really, really well in the long run in your investing journey. Because what happens as an individual investor, when you buy individual companies, sometimes you may have a bias, sometimes you obviously as an individual investor, for your ability to get really on top of some of these companies, your access to these companies, your understanding to the sector might be limited. And as an individual investor, a lot of the time you actually take cash calls that, like in a pandemic, a lot of my friends took significant cash calls that the number of cases are rising, etc., etc. But let's say if you are in a mutual fund, then the mutual fund managers would maximum take maybe 8-10% cash call. So over a period of time, I would say the mutual fund investing, as long as you can choose the right fund manager and the right fund for which you are guiding your viewers, your investors, and I'm sure Morningstar is doing a fantastic job as it used to do in the past when I was managing the fund. So I think that is the first thing, that if you have a 3, 5, 10-year view, which I have, mutual funds is a good vehicle. Second point which I'm saying is that for India, there are a lot of things which will fall in place. Let's say, for instance, our oil outgo today is, let's say, $100. I see that coming down to maybe less, after 10 years also, it may remain constant at $100, because we are working on so many alternate fuels, like whether it is solar, whether it is wind, whether it is electric vehicles, or now, people are manufacturing this ethanol through bagasse and all. So there are a lot, there is talk that ethanol may get mixed with diesel also, which is a significant portion. So a lot of the things which are getting worked out will be in the play for India in next 3-5 years. Like, we have heard about this freight corridor between Bombay and Delhi. For last 10 years, we are hearing. But a lot of these projects are now due for completion, and it will aid again to the overall economic growth. I was just listening today only in the morning that the Newar airport near Delhi is now a reality, and it will start in 2024. The airport in New Bombay will start in 2023. So these are things we've been waiting for the last 10 years. So I think the overall economic growth in India is really poised. And consider a world wherein, we are talking of a recession in UK, we are talking of a recession in the US, or recession-like conditions. तो बहुत पानी तो वहीं बहेगा जिधर ढलान होगा, तो ये ना, और पैसा तो उधर ही आएगा जिधर रिटर्न्स होएगा, right? So I feel that lot of money will get attracted towards India. And one pertinent point which I want to mention in favor of India is essentially, this China plus story. A world has now learned to believe that it is not only price which is very important, it is also the quality, the consistently. So people in the world will look to have double source of product outsourcing, which were purely dependent on China. And we can already see that happening. When I talk to my friends in textiles, when I talk to my friends in garment, when I talk to my friends in solar, when I talk to my friends in pharmaceutical, they're all saying that the inquiry has significantly increased over the last 12 months, and it will result into the business. So the one leg which did not work, the manufacturing leg, which did not work for India for last 10-15 years, and I think it is now ready to work, and it will ready to contribute to companies as well as to the country's export competitiveness. So to my mind, we are well poised from a 5-10 year perspective. I remain bullish and convinced, and which is why opportunities like this, when there is a confusion, is a good entry points for investors to bet on good companies.
Sure. And I think you touched on two very important points, Madhu. One is obviously the infrastructure push that's happening, and the manufacturing that increasingly moving to India. Just curious to know your thoughts about, while we've seen obviously a lot of public infrastructure that's coming up, what about private capex? Are you seeing some green shoots there? What's your thought around that?
Yeah, it is now clearly getting visible. You talk to the steel company. So,
Mhm.
Kostu, what has happened? Because there is a significant cleanup in the industry itself, which happened. And for the first time in a country like India, so many industries actually went to jail. So,
Mhm.
people were damn scared to borrow money. So the corporate balance sheets have got significantly deleveraged. Whether
Mhm.
you see steel sector, or cement sector, or any core industry, even power sector, corporates have paid off significant, and there has been not significant capex in the last, let's say for 5 years or so, for last 10 years or so.
Mhm.
So I would argue now that the corporate balance sheets are allowing for the capex to happen, and a lot of this capex will happen in a very sensible manner through combination of small debt and lot of internal accruals, which will be very productive for companies and for their ROEs and ROCs, because you are going to invest your own cash, and that is where maximum value creation happens. So we can already see that happen in almost all sectors. Very early days, I can see it in pharma, I can see it in sugar, ethanol, I can see it in steel. So we are clearly seeing this happen maybe after a gap of 10 years.
Right. And so before I go on to the next question, just for the audience, do any questions that you have, please put in through the Q&A tab on your Zoom window, and we'll spend the last 5-10 minutes asking your questions to Madhu. So Madhu, we spoke about these real economy, sort of real world old economy stocks. Now, I think the one thing that's on everyone's mind is the new age technology companies, that we've seen so many of, being listed, and there's a lot of interest from investors around that. Just wanted your thoughts and views about, how do you see the space, and is there any particular segment that is of particular interest to you?
So these new age technology companies are here to stay, because the way the businesses are shaping up, the technology will play a big role, undoubtedly. But for a person like me, some of these companies were very expensive when they got listed, and they continue to remain expensive. But I don't say, again, we are very open, we keep on evaluating, and I am very sure there will be big winners out of some of the companies which have got listed, and some of the companies which will get listed over the next few years. So we have an open mind. We continue to work. And again, Costume, to my point, the flexibility and open-mindedness. I can't analyze these companies purely based on P multiple. I will never be able to buy. So I will have to use the different metrics to analyze these companies. What are the number of customers they are serving? What is the kind of top line they can have? What is the kind of market size they have? How much market they will be able to capture? How much growth can they have from a 30, 35, 40% growth CAGR if they do? So we will have to arrive and use different metrics to analyze these companies and come. But there will be winners for sure in this segment.
Sure. And you alluded to a little bit earlier in terms of just the momentum-based investing that's happened even with the largest of companies, globally listed companies. So how are you using that from your investing framework when you look at it? Because we've seen, like you spoke about the FANG stocks that have fallen so much off the highs. So what are some things that you keep in mind, when you look at momentum in the markets?
So this momentum has become a big word now, Kostu, because in the earlier days, what was the theme? That you identify a good company, you hold it for 3-5 years, and you will make money. While that remains intact, the momentum is playing a very crucial role in your investing. Like you look at, metaverse, for instance, just give you an example. In 6 months, the stock has become 50%. So from maybe close to $1 trillion, it's now fallen to $450 billion or so. Now stock fluctuates 10% in 3-5 days. It was 177 5 days back. It is 200. It's become like a mid cap, right? So what I'm trying to say, you have to make this momentum as your friend, because now we are playing against the machines. We are a lot of the funds which have come in the world, also in India, are passive funds. They have come through ETFs. So when they want to buy, they are happy to buy it at any price, because it comes like, you buy me $200 million of India. It doesn't come that you buy me a TCS at this price. They say that we are allocating money and we have to buy $200 million. When it comes to sell, it comes in the same fashion. So it's an absolute delight for an investor like me, and I'm sure it should be a delight for a lot of people, that, if you are on the right side, when that is what this market is providing that opportunity to be in. So if you are on the right side, so through the momentum, you can possibly definitely make that extra return. However, it will even test your patience. Like, let's say you think the value of the stock is worth 100 rupees, and at 100 rupees, it is very compelling. Be always be prepared that some machine will come and hit it, maybe till 80 rupees. And you have to have the conviction and the preparedness to not only hold on to the stock which you bought at 100 rupees, but be prepared to buy more if it falls 80 rupees just because of no reason. So momentum actually, to me, it is proving to be my biggest blessing of life. We are really, really able to see a stock. And similarly, something which you buy, you think it will go up 3 times in 5 years. But if it goes up 2.5 times in 1 year, I am more than flexible to book my profits, because I have achieved majority of my investment objective. So this world, Kaustubh, is going to be around us. We have to learn to deal with it. We have to learn to adjust our investment style with this world momentum, and we can't wish it away.
Right. Absolutely. I think that's very important points made there, Madhu, because like you said, flexible investing approach is crucial. Make momentum, volatility your friend, because, and you have to have that nimble approach. I think that's very, fair observations that you've shared with the audience. Just in terms of, I think the one other thing that people tend to talk about and look at when we think about the Indian markets is obviously we've seen the flows from foreign investors, and we know that, obviously with now global central banks, starting to hike rates, that could potentially, be a challenging portion of, in terms of the foreign institutional flows. But at the same time, we've obviously seen domestic flows that have been pretty strong. So how are you viewing this space, and what do you think will be that dynamic, in the years going forward?
Before I can see in the chat box a lot of people asking about what the themes are and what do we like over the next 3 years. And I just give you one example, like how I gave you the example of pharmaceutical. So let's say we are excited and we are evaluating all these EPC companies. Now the entire market capitalization of all the EPC companies is less than 75,000 crores. All of them, barring Larsen and Toubro. Now it is a hated sector. No one has made money in the last 10, 15 years. Now people are arguing ROC, ROE, whether these businesses have good governance, whether they will get money from the government, etc., etc. To my mind, a lot of those worries are there in the prices. Their margins have been hit in the last 2-3 quarters because of commodity price hike. But we think all those will stabilize now. Now again, give you a context. Now, Nykaa, one company, is valued maybe 50% higher than all of these EPC companies put together. Now, if you have to build $1 trillion infrastructure over the next 5 years, 7 years, I don't think any new age company is going to come and build this new infrastructure. This will be built by these EPC contracted companies only. And we see a lot of these companies have cleaned up their balance sheets. So we are very excited to evaluate. We're already investing in some of these companies with a 3-5 year perspective. The other theme which I talked about, India manufacturing. I see great potential in that space. I think, and it covers wide variety of sectors. So it is about buying the right company which can capture the India manufacturing theme. Now it is for you to decide whether you want to buy an engineering company or whether you want to buy equipment supplier, you want to buy something from a specific sector. But this theme is going to here to stay. Third theme is the ethanol theme, because this blending is now here to stay. I think it is a win-win solution for the farmer, for the government, for mixing with petrol. If there is a breakthrough which happens in diesel, which I am confident the world is working around and it will come through. So this is here to stay again. And again, this volatility provides you entry points.
Correct.
And the last point, we are very, very excited about banks and financial services stocks because again, they have corrected time-wise significantly. A lot of these banks have cleaned up their balance sheet, significantly in the last 3, 4, 5 years. The provision coverage ratios of even public sector banks have moved up upward of 75% for the past loans, and a lot of them are trading at below one-time book value. So once inflation really cools off and the market gets a sense, there is a possibility of good re-rating in the financial services space.
Sure. Thanks, Madhu.
So
I think that was.
I just addressed this, and I just come to your point of the
Sure.
FII selling. So this is the highest amount of FII selling which we have seen, Kaustubh, at least even in my career. So I was just doing the data. So FIIs, whatever money they got between 2011 and 2021, they have all taken it out in the last 8 months. Wow. So what was being brought in 10 years, net FII flows, has all gone away. So we are actually at the lowest point as far as the FII outflows are concerned. It is even far more severe than what we saw at the time of global financial crisis. So going by the past, we have to now look at the points where these outflows will stop, and they will give us like enough indications. First, they will deaccelerate, and I'm quite hopeful that over the next few months, once we see reversal in the FII flows, this market will be something else, because the domestic investors who have bought all through this FII selling, they are unlikely to come and sell in the next with a 5-10% rise. If FIIs turn buyer, and that's one single point which you have to monitor. And even the IPO market now have become very tight. The rules have changed. So it will not be very easy for any company to just come and do IPO. So FII selling, stopping FII selling will be a very important point to monitor. We have our own metrics by which we are monitoring it. Let's see where it goes.
Sure. So just related to that, Madhu, one, obviously people are attributing that to, just that, interest rates are rising globally and, liquidity is being sucked out and, money is moving out from EMs. But do you also think that, somewhere people are maybe moving to more relatively better valued markets? What's the sense that you're getting that maybe India is probably a little more in the overvalued zone as compared to the others? What are the FIIs sort of looking at there?
If you look at emerging markets, what are the large emerging markets? Russia has its own challenges, which used to be a large emerging market. Chinese markets have their own challenges because of the government policies which we saw. Even though China has become very cheap, so I think some amount of money may definitely be moving, as you are hinting. The other emerging markets are not actually strictly compared to India. You can't compare a African market to India, regardless of how cheap or expensive they are. So I feel that it is not a case of money being withdrawn and being put up in other emerging market. It is mix of people having lost their pant and shirt in other emerging markets, and that is why people are actually taking a call that we have to withdraw. See, when you sell the good stock out of your portfolio when you're in trouble. So India is that one good stock in people's portfolio, and that is where I think trimming is happening in Indian market, because people would have lost disproportionate money in China and Russia. So that is point number one. Point number two, of course, this overall geopolitical situation, American markets again having fallen significantly. So people may be able to see a lot of opportunity in the American markets also. But Kaustubh, beyond the point, again, going by my experience, we can break our head and we can come at some intellectual answers. It's unlikely to help you big time in your investing. For investing, you have to keep going back to the roots, identify good sectors, identify good companies, give it time. And with due course of time, a lot of these macro things which look like a big worry, they solve themselves. We can't solve them.
Yeah, absolutely. I think very, very important point, Madhu, because going back to basics, of investing, staying invested, having a flexible approach like you spoke about, is I think the key message that, we, for our viewers. Just in terms of, looking at, maybe some of the potential risks that you think that could, either slow down or, that some things that you would want to keep an very close eye on,
There are two, three things. One, we definitely like to watch this geopolitical moment. Supposing, let's say, China were to invade Taiwan,
Right.
then I think a lot of bets will be off, including my bet, because we don't know then where the world is going. So we will watch the geopolitical situation very carefully. Second thing, of course, from an India perspective, I will watch even the oil prices, at least in the short term, very carefully. And third, even though I am convinced that the inflation and inflation expectations have to some extent being addressed, but this is one thing, the overall, how much tightening is happening, how much interest rate will rise around the world, where the inflation gets into control. So these are three things which we'll very closely watch from market perspective.
Sure. And just before we move on to the the audience questions, Madhu, just a couple of closing questions from my end. One is we have a lot of fresh new investors in the market. Last couple of years who come to the market. The data shows how the trading volumes. A lot of direct investing happening, getting into certain sectors, stocks, and themes. Investors haven't really seen necessarily what you'd call a prolonged bear market, so to speak. So, what is your advice to that new investor or any investor in the market? How should they go about approaching investing right now?
So I would say if you are directly investing, you have to really have the knowledge of the subject. Don't please invest based on any tip or what you see on any business channel or what you hear from someone. You have to, over a period of time, you have to develop your own style, you have to develop your own conviction, you have to do the numbers yourself. Right? And there is no replacement for that. Second thing, I would say do not ever chase momentum or only momentum. You can work on momentum after you have done your work. Third thing, I would say that, if you are starting, don't do 100% direct investing. Maybe put some amount of money into mutual funds, which are less riskier, which are more diversified. And, some amount of money, you see how your own direct investment is working, how your own learning is compounding, how your own learning is happening. And then over a period of time, increase your allocation to direct investing vis-a-vis mutual fund. Fourth, I would say take real long-term view, because in the short term, stock prices will fluctuate. That's their job to do. Our job is to make sure that we are on the right side of this fluctuation and keep on investing and believe in the India story, as people like us, people like me who have believed, and that has been the major reason of our success. That it's not that I've not seen troubled times in the last 30 years. I've seen far more troubled times and far more painful times than what we are undergoing just now. It is nothing. But as long as you have the broad conviction in India, in the India story, I think things eventually work out in your favor.
Absolutely. I think very, very fair point, Madhu. And, I had this question.
And last point,
please.
If you are doing derivatives, a lot of the people who I come across, they are doing all the put call, if it is working well for you, if you have really arrived at a method how to deal with this, for sure you must do it. But you must never take disproportionate risk in these things, because once in a while they can really backfire and you may end up losing a lot of money. So I'm just saying, have your risk parameters well entrenched if you are doing any of this trading and derivative stuff.
Absolutely. I think very well said, Madhu. Have to have a framework, have your risk aligned, and do your own research. It's very important for every investor that you do your own due diligence and research. Do not rely only on what you hear or what your friends are doing, or what you would hear on social media. So before I go to the audience question, in fact, there is an audience question which I intended to ask. So this is a question from Pankaj Tanna, which was, obviously everyone makes certain mistakes. So what are maybe some of the biggest misses or mistakes that you've made over your journey, which you have learned from, which you want to share with the viewers?
For Mr. Tanna, I have a good news. I'm actually writing a book on my mistakes. So I can possibly summarize it in 5-10 minutes. But I must say that, we have also made a lot of mistakes, sometimes going into the greed cycle, sometimes investing into companies which we were convinced that they do not have the highest level of governance or highest level of transparency with the minority investors. Sometimes, we invested only looking that the company is very cheap, and then the cheap became even more cheap. So, plethora of mistakes which you have committed. But hopefully, the only thing which has worked out in my favor at least, that I have always been open that yes, I can commit a mistake. As long as I commit a mistake which I can afford, that is most important. So I have committed errors which I can afford. I have not committed errors which has really taken me down. And the second thing is, as I said, we've remained more nimble. We've remained very, very focused. And, it is not about committing mistakes. It's about you. And I'm sure I will still commit mistakes. It's about committing not the same mistake which you've committed. If you stop committing the same mistake which you've committed, then you will run out of mistakes.
Right. No, that's very useful way of putting it, Madhu. So just moving on to a couple of other audience questions, and there's a question now, from Satish, which talks about, and you spoke about the flexible investing approach, but in the current market scenario, value or growth, where are you seeing more opportunities?
So right now I'm more tilted towards value. As I told you, some of the sectors we spoke about, we are tilted more towards value, where we see, at least in the next 4 quarters, the results will come in these value stocks, and there will be momentum in these stocks because some of these sectors are significantly underowned by the market. They are very, very little spoken about by the markets, and there is an underweight. So the way it works, Kaustubh, is, let's say if I identify a company, someone is holding it for 10 years and he did not make money. That's the only reason why I should hope to make money. Because if I go by his 10-year experience, then I will only buy companies which are in vogue or in fashion. So we are more tilted towards value, where we see momentum could happen and growth could happen in the next 12 to 24 months.
Sure. There's also another interesting, question from Sagar, and this is a much spoken about topic globally, and it's also catching a lot of interest in India, is around the disruption that is potentially on the way in the automobile space, right? That with EVs and sort of alternate fuels coming in. So, what is your take on this segment? Do you think that we are on that path, and we could see a lot of disruption in the space in the coming years?
Yeah, we are surely on the path. The question is only how much time will it take. So I would say, yes, we invested very early on in, as a matter of disclosure, in the only real listed company in India in the EV space, right? And I continue to be the investor in that company. So my point is that, they are real opportunities from a medium to long-term perspective. And we have to keep on evaluating. And when you are investing in auto company, the best thing will be if there is an old auto company which is transiting towards this new area and has the portfolio of both the sector, which is the old and the new.
Right. Yeah, that's a very fair point. Archit Maria has a question in terms of, what will be the consequences of a recession in US and Europe in the export sector, especially, around, say, textiles, manufacturing, and the IT sector. What could potentially be the impact, and how do we negate some of that?
So again, my view is that, this recession may not be like the earlier recession, because everything is happening very fast. Like how we saw the bear market in NASDAQ, it is only 6 months old, but there are so many companies which are down 70, 80, 90%. And only a matter of 6 months. So abhi sab cheez fast hone wala hai, Kaustubh. So maybe recession may not be as prolonged as people are fearing, or it may not be for years and years to come. In that sense, there may not be much impact. And as long as India remains competitive, and as I said, that world is looking for an alternate along with China. So I see more opportunities than threat, even in the recessionary conditions. Because in the recessionary conditions, again, what you want to buy is buy cheap and buy reliable. And as long as Indian companies can offer that, we will have a interesting time. So again, these are all moving targets. We will keep on evaluating how deep this recession is and how early the revival will be, and we'll take an appropriate call based on facts which emerge in the future.
Sure. Madhu, I think it's been a great conversation. I know we could go on, and I think the insights and the anecdotes that you share are very, very useful, to our viewers. Just before we wrap up, one final question from me, and I think that's very important in today's, fast-paced world, as you've also been talking about. How do you personally de-stress? What are some of the outlets that you would use, and that, because we're all living under these stressful times. So how do you de-stress?
Oh, Kaustubh, again, an honest answer. I have not been able to get a handle on that till now. I'm getting better at it, but I'm not been able to get a handle because, see, I am so passionate about markets that, I'm all the time actually involved in the market. So you can say, like, today is a Saturday, and this is my first meeting, and the last meeting will be till 8 o'clock. So in a way, I don't get stressed with markets. That's what you can say. This, whether there is a significant fluctuation in individual companies, I'm learning to get handled. But now I'm taking a little more time out. My children have become older, so spending more time with them, and the usual stuff.
Sure, Madhu. I think that's, it's been great chatting with you. And, I can say with a lot of confidence that our investors have come back a lot more enriched and, with a lot more interesting perspectives about the Indian economy, the markets, and, which will equip them to be better investors. So, Madhu, thank you so much again for your time.
Thank you so much, Kaustubh. It must always a pleasure talking to you. You really end up taking out the best from people you are talking to. And thank you so much for, again, giving me this opportunity. Hope to be in touch. Thank you.
Our pleasure, Madhu. Thank you so much.